JPMorgan, we understand, or they announced last year that they were going to be adding Indian government debt to their benchmark EM index starting in June. So that's obviously a milestone for what's Asia's third largest economy. But we're just actually getting some more details on this in particular here, because what we're hearing from JPMorgan is that they're saying that that inclusion is on track, and also most of their clients are ready for this. So they're expecting somewhere around the vicinity of $20 to $25 billion of foreign inflows. That assumes an index neutral position. So, Garfield, this whole inclusion story, I mean, there's the potential benefits in the sense that you could see perhaps structurally lower interest rates. It could provide some relief for the rupee, but you've also got concerns that perhaps this could increase volatility in the markets there as well. So net, is this good or is it bad news, do you think?
Well, overall, Annabelle, I think it's good news for Indian markets in general, provided we can get over the hump of the ongoing Indian election, which has been causing some concerns, especially in the equities market. But even with bonds, on the back of the initial decisions by JPMorgan that it was going to be included, this is confirmation of that and of the timing. There was a fair bit of inflow that came to Indian bonds as a result, but that had slowed right down in recent weeks, even running into the election, and it was fairly obvious that, along with the general risks that there were around that time, when we had this high US CPI and the potential idea that the Fed might actually hike rates, that meant it wasn't a good time for the bond market in general. Indian bonds definitely went off a little bit at that time, and foreign inflows pretty much stopped. So there's that looming appetite there, I think, in general for Indian bonds, given what's been going on, provided the election doesn't spring any nasty surprises. So that's there, and then you have this. So it is a signal that the medium to long-term outlook for Indian bonds and possibly to some extent for the rupee is more bullish than it was, and in particular quite bullish for bonds. There are those tactical factors that I mentioned, including if we've got US CPI again next week, if that was to come out robust enough to drive fresh declines in treasuries, that would also have an impact on the bull case for Indian bonds.